Question 1. Scenario-based. Mr. Jackson owns a home in Illinois and has a HO3 policy. During a severe storm, his roof is damaged by a windstorm and water enters his home, damaging his personal property. Mr. Jackson files a claim for both the roof damage and the personal property damage. The insurance company denies the claim for the personal property damage, citing its policy exclusions. What is the likely reason for the denial of the personal property damage claim? A. Personal property damage from windstorms is not covered under HO3 policies. B. Water damage caused by wind-driven rain is typically excluded unless a separate endorsement is added. C. Only the roof damage is covered under HO3, not personal property. D. The HO3 policy does not cover damages resulting from natural disasters. Answer B. Water damage caused by wind-driven rain is typically excluded unless a separate endorsement is added. Explanation: under the HO3 policy, damage caused by windstorms is generally covered. However, while the windstorm may have caused the initial damage to the roof, the resulting water damage from rain that enters through the damaged roof is often excluded under standard coverage unless a specific endorsement, like a water backup endorsement, is added. This exclusion is detailed in most HO3 policies, particularly for water damage caused indirectly by a covered peril like wind. Homeowners can add additional endorsements to address these gaps, such as a water backup endorsement. Illinois regulations also require insurers to provide policyholders with clear documentation regarding these exclusions. Question 2. Standard practice question. Which of the following is true regarding the Illinois Fair Access to Insurance requirements? FAIR Plan. A. It provides coverage for homeowners in high-risk areas who are unable to obtain insurance through the private market. B. It is only available for commercial properties, not residential homes. C. It guarantees that all high-risk properties in Illinois are automatically covered without any underwriting process. D. The FAIR plan covers flood damage for homeowners in Illinois. And so, hey, it provides coverage for homeowners in high-risk areas who are unable to obtain insurance through the private market. Explanation: the Illinois FAIR plan is designed to offer insurance coverage to homeowners who cannot obtain it through the standard market due to living in high-risk areas or other factors. It provides essential property coverage for these individuals, ensuring they have access to basic insurance protections. However, the plan does not automatically cover all high-risk properties without an underwriting process, nor does it cover commercial properties. It also does not include coverage for flood damage, which would require a separate policy through the National Flood Insurance Program, NFIP. Question 3. Standard practice question. Under a HO5 policy, how is personal property coverage typically different from the coverage provided under an HO3 policy? A. HO5 policies offer named peril coverage for personal property, while HO3 offers open peril coverage. B. HO5 policies provide open peril coverage for both dwelling and personal property, while HO3 policies only provide open peril coverage for the dwelling. C. HO5 policies exclude personal property coverage for high-value items, while HO3 policies automatically include it. D. There is no difference between the personal property coverage of an HO3 and HO5 policy. Answer: B. HO5 policies provide open peril coverage for both dwelling and personal property, while HO3 policies only provide open peril coverage for the dwelling. Explanation: a HO5 policy provides broader protection compared to a HO3 policy. Specifically, HO5 offers open peril coverage for both the dwelling and personal property, meaning it covers all risks except those explicitly excluded in the policy. In contrast, the HO3 policy provides open peril coverage for the dwelling but only named peril coverage for personal property, which limits the protection to specific perils listed in the policy. This distinction is crucial for homeowners who seek broader coverage for personal belongings. Question 4. Standard practice question. Under Illinois insurance regulations, which of the following could result in a valid cancellation of a homeowner's policy by the insurer? A. The homeowner filed 2 claims in the past 5 years. B. The homeowner added a new home security system. C. The homeowner committed fraud when applying for the policy. D. The homeowner moved out of state but kept the policy on the Illinois property. Answer: C. The homeowner committed fraud when applying for the policy. Explanation: under Illinois state law, insurers are permitted to cancel a homeowner's policy for specific reasons such as non-payment of premiums or fraud misrepresentation in the application process. Filing claims or adding a security system does not justify policy cancellation, and homeowners can maintain policies on properties they own even if they move out of state. Fraudulent activity during the application process, however, is A legitimate reason for cancellation as it violates the duty to disclose accurate information under Illinois insurance regulations. Question 5. Scenario-based MS. Rivera recently purchased a home in Illinois and added an identity theft endorsement to her homeowner's policy. A few months later, she discovers unauthorized charges on her credit cards and personal loan accounts opened in her name. She files a claim under the identity theft endorsement. What will her insurance most likely cover under this endorsement? A. The full repayment of the fraudulent charges. B. The legal fees and costs related to restoring her identity. C. The cost of monitoring her credit indefinitely. D. The replacement of her stolen credit cards. Answer: B. The legal fees and costs related to restoring her identity. Explanation: the identity theft endorsement in a homeowner's insurance policy typically covers the costs associated with restoring a policyholder's identity, such as legal fees, notary fees, lost wages, and expenses related to clearing fraudulent accounts. However, it does not cover direct repayment of fraudulent charges, which would be handled by the credit card issuer or financial institution, or provide indefinite credit monitoring. While some policies may offer temporary credit monitoring, replacing stolen credit cards would typically be the responsibility of the card issuer. Question 6. Standard practice question. Which of the following is NOT typically a factor considered when calculating homeowner insurance premiums in Illinois? A. The age and condition of the home. B. The homeowner's credit score. C. The homeowner's medical history. D. The home's proximity to fire hydrants or fire stations. Answer: C. The homeowner's medical history. Explanation: homeowners insurance premiums in Illinois are influenced by factors such as the age and condition of the home, the homeowner's credit score, and the home's proximity to fire protection services like fire hydrants and fire stations. However, the homeowner's personal medical history is not a factor in determining premiums for property insurance. Medical history may be relevant for other types of insurance, such as health or life insurance, but not for homeowners insurance. This is governed by the Illinois Insurance Code, which ensures that only relevant risk factors are used in premium calculations. Question 7. Standard practice question. Which of the following is TRUE? Regarding the replacement cost method for personal property under an Illinois homeowner's insurance policy. A. It pays the actual cash value (SEV) of the item, taking depreciation into account. B. It pays for the full replacement of the item without deducting for depreciation. C. It only applies to items that are less than 5 years old. D. It is automatically included in every homeowner's policy. Answer: B. It pays for the full replacement of the item without deducting for depreciation. Explanation: the replacement cost method pays for the full cost to replace damaged or stolen personal property without factoring in depreciation. This differs from actual cash value (SCV) coverage, which subtracts depreciation from the item's value. Replacement cost coverage must be explicitly chosen or endorsed in many homeowners' policies. In Illinois, insurers must clearly disclose whether the policy is based on ACV or replacement cost. Replacement cost coverage is beneficial for policyholders who want to receive the full value of their lost or damaged property without the reduction from depreciation. Question 8. Scenario-based. Mr. Stevens lives in Illinois and owns a condominium covered by a HOSIX policy. During a storm, the roof of his condo building is severely damaged and the Homeowners Association (HOA) assesses each owner to cover repair costs. What coverage under his HOSIX policy would help him pay for this assessment? A. Loss of use coverage. B. Medical payments to others. C. Loss assessment coverage. D. Other structures coverage. Answer: C. Loss assessment coverage. Explanation: HOSIX policies typically include loss assessment coverage, which helps condominium owners pay for special assessments levied by their HOA for losses that exceed the HOA's master policy coverage. In this case, the storm damage to the roof is a shared expense for all condo owners, and the HOA is assessing the owners to cover the repair costs. Loss assessment coverage can help Mr. Stevens pay his share of these costs. Loss of use, medical payments to others, and other structures coverage do not apply to this situation, as they cover different types of losses or expenses. Question 9. Standard practice question. In the context of homeowners insurance, what is subrogation? A. The process by which the insurer reimburses the policyholder for losses. B. The right of the insurer to recover the amount of a claim paid from a third party responsible for the loss. C. The act of denying a claim based on policy exclusions. D. The insurer's ability to cancel a policy due to non-payment. Answer: B. The right of the insurer to recover the amount of a claim paid from a third party responsible for the loss. Explanation: Subrogation allows an insurance company to seek reimbursement from a third party that caused a loss for which the insurer paid the policyholder. After compensating the insured for the covered loss, the insurer may step into the policyholder's legal rights to sue or seek recovery from the responsible party. This ensures that the responsible party bears the cost of the loss and prevents double recovery by the insured. This legal principle is common in Illinois and other states and is vital for protecting insurers from having to bear the full burden of a claim that should be the responsibility of a third party. Question 10. Standard practice question. Which of the following is typically excluded from an Illinois homeowner's insurance policy? A. Damage caused by a fire. B. Damage caused by a flood. C. Damage caused by windstorm. D. Damage caused by theft. Answer. B. Damage caused by a flood. Explanation. Flood damage is not typically covered under standard homeowners insurance policies. Homeowners in Illinois and elsewhere must purchase separate flood insurance, typically through the National Flood Insurance Program (NFIP), to protect against flood-related losses. Fire, windstorm, and theft are standard perils covered under most homeowners insurance policies, particularly under HO2 and HO3 forms. Flood insurance is especially important in areas prone to flooding, as homeowners without this coverage would be responsible for all flood-related damages. Illinois law mandates that insurers inform policyholders of the availability of flood insurance. Question 11. Standard practice question. Which of the following types of coverage is most appropriate for a homeowner in Illinois who wants to protect against liability claims arising from accidents on their property? A. Dwelling coverage. B. Medical payments to others coverage. C. Personal liability coverage. D. Additional living expenses coverage. Answer. C. Personal liability coverage. Explanation. Personal liability coverage in a homeowner's insurance policy provides protection if the policyholder is held legally responsible for injuries to others or for damage to others' property occurring on their property. It covers legal fees and damages up to the policy limits. Medical payments to others covers medical expenses, but not legal liability, and dwelling coverage protects the physical structure of the home. Additional living expenses coverage helps cover costs when a home is uninhabitable due to a covered loss, but does not address liability. Question 12. Scenario-based. Mrs. Thompson owns a historic home in Illinois, and a tree falls on her home during a storm, damaging the roof. While her homeowner's insurance policy covers the repair costs, she discovers that restoring the roof with historically accurate materials will be more expensive than modern alternatives. What option would likely help cover the additional costs for historic restoration? A. Ordinance or law coverage. B. Replacement cost coverage. C. Actual cash value coverage. D. Personal property coverage. Answer. A. Ordinance or law coverage. Explanation. Ordinance or law coverage provides additional coverage for costs related to rebuilding or repairing a home to meet current building codes or regulations, which can be particularly important for historic homes. In this case, the policyholder may need historically accurate materials to comply with preservation regulations. Replacement cost coverage pays for new materials, but not necessarily historic ones, and actual cash value subtracts depreciation. Personal property coverage protects the contents of the home, not the structure. Question 13. Standard practice question. Which of the following perils is typically covered under an Illinois HO2 homeowners insurance policy? A. Earthquake. B. Nuclear hazard. C. Vandalism. D. Flood. Answer. C. Vandalism. Explanation. A HO2 homeowners insurance policy provides named peril coverage, which means it only covers specific perils listed in the policy. Vandalism is typically one of the covered perils under a HO2 policy, while perils like earthquake and flood require separate policies or endorsements. Nuclear hazards are generally excluded from homeowners insurance policies. Illinois residents should assess their risk of perils not covered by standard policies and consider additional coverage if necessary. Question 14. Standard practice question. Under Illinois insurance law, how long must an insurance company provide notice before cancelling a homeowner's insurance policy due to non-payment of premiums? A. 10 days. B. 30 days. C. 45 days. D. 60 days. Answer. A. 10 days. Explanation. Illinois law requires that insurance companies give policyholders at least 10 days notice before cancelling a homeowner's insurance policy due to non-payment of premiums. For other reasons, such as underwriting issues or fraud, the required notice period may be longer, typically 30 days. This ensures that policyholders have an opportunity to address non-payment and avoid lapse in coverage. Question 15, scenario-based. Mr. Patel's home in Illinois is severely damaged in a fire and it will take several months to repair. His homeowner's insurance policy includes additional living expenses ill coverage. Which of the following costs would be covered under ALE? A. The cost of repairing the fire damage. B. The cost of a temporary rental home while his house is being repaired. C. The cost of replacing furniture destroyed in the fire. D. The cost of upgrading his home during repairs. Answer: B. The cost of a temporary rental home while his house is being repaired. Explanation: additional living expenses ill coverage helps pay for extra costs incurred if a home is uninhabitable due to covered loss, such as fire damage. This typically includes costs like temporary housing, meals, and storage fees while repairs are being made. ALE does not cover the repair costs. Dwelling coverage would, replacing destroyed personal property coverage would, or upgrading the home, which is not covered unless specifically endorsed. Question 16, standard practice question. In Illinois, what is the minimum liability coverage limit required under a homeowner's insurance policy for bodily injury to others? A. $10,000. B. $25,000. C. $50,000. D. No minimum requirement. Answer: D. No minimum requirement. Explanation: Illinois does not mandate a minimum liability coverage amount for homeowners insurance policies. However, insurers typically offer policies with liability coverage limits starting at $100,000 or more. Homeowners can choose higher limits to better protect their assets in case of a liability claim. The state does require certain minimums for auto insurance, but homeowners' liability coverage requirements are determined by the policyholder's preferences and the insurer's offerings. Question 17, standard practice question. Under Illinois law, which of the following is considered a valid reason for an insurer to non-renew a homeowner's insurance policy? A. The homeowner files a claim for water damage. B. The homeowner installs a new swimming pool. C. The homeowner commits material misrepresentation. D. The homeowner adds solar panels to the roof. Answer: C. The homeowner commits material misrepresentation. Explanation: an insurer may non-renew a homeowner's insurance policy for valid reasons such as fraud, material misrepresentation, or significant changes in risk like neglecting to disclose dangerous conditions. Filing a claim for water damage or installing features like a pool or solar panels typically results in premium adjustments or endorsements rather than non-renewal, provided the homeowner informs the insurer and the risk remains insurable. Question 18, scenario-based. Ms. Lee owns a home in Illinois, and her insurer has denied her claim for basement flooding after a heavy rainstorm, stating that the damage is excluded under her policy. Which type of insurance should Ms. Lee have purchased to cover this type of loss? A. Earthquake insurance. B. Flood insurance. C. Vandalism and malicious mischief coverage. D. Additional living expenses coverage. Answer: B. Flood insurance. Explanation: flood insurance, typically purchased separately through the National Flood Insurance Program (NFIP), covers damage caused by surface water, including basement flooding after heavy rain. Standard homeowners policies do not cover flood damage. Earthquake insurance, vandalism coverage, and additional living expenses do not apply in this scenario as they cover different types of risks. Question 19, standard practice question. What is the primary difference between actual cash value and replacement cost coverage under Illinois homeowners insurance policies? A. ACV accounts for depreciation while replacement cost does not. B. Replacement cost is only available for structures, not personal property. C. ACV is typically more expensive than replacement cost coverage. D. ACV provides higher payouts than replacement cost coverage. Answer A. ACV accounts for depreciation while replacement cost does not. Explanation: actual cash value ACV coverage factors in depreciation, meaning that payouts reflect the item's age and wear. Replacement cost coverage, on the other hand, reimburses the policyholder for the full cost of replacing the damaged property without deducting for depreciation. ACV typically results in low payouts but may have low premiums. Replacement cost is available for both structures and personal property depending on the policy. Question 20, standard practice question. Which of the following is an optional coverage that can be added to an Illinois homeowner's policy to protect against damages from sewer or drain backups? A. Earthquake endorsement. B. Sewer and drain backup endorsement. C. Ordinance or law coverage. D. Identity theft endorsement. Answer: B. Sewer and drain backup endorsement. Explanation: A sewer and drain backup endorsement provides coverage for damages caused by backups in sewers or drains, which are typically excluded from standard homeowners policies. Earthquake endorsements, ordinance or law coverage, and identity theft endorsements offer protection for different types of risks, such as seismic activity, compliance with building codes, and identity theft, respectively. Illinois homeowners should assess their risk for sewer backups and consider this optional coverage if needed. Question 21. Standard practice question. In Illinois, if a homeowner has a personal umbrella policy in addition to their homeowner's insurance, what does the umbrella policy provide? A. Extra protection for personal property. B. Coverage for perils excluded under the homeowner's policy. C. Additional liability coverage beyond the limits of the homeowner's policy. D. Coverage for flood damage. Answer. C. Additional liability coverage beyond the limits of the homeowner's policy. Explanation. An umbrella policy provides additional liability protection beyond the limits of standard homeowners insurance policies. It covers claims such as bodily injury and property damage for which the homeowner is legally responsible. This policy does not provide extra coverage for personal property or flood damage, nor does it cover perils excluded under the homeowner's policy. Question 22. Scenario-based. Mr. Garcia's Illinois home suffers damage from a burst pipe while he is away on vacation. His homeowner's insurance policy includes water damage coverage, but the insurer denies the claim because Mr. Garcia did not take adequate measures to protect the home in his absence. What step could have prevented the claim denial? A. Installing smoke detectors. B. Turning off the water supply before leaving. C. Securing windows and doors. D. Adding flood insurance. Answer. B. Turning off the water supply before leaving. Explanation. Many insurance policies require homeowners to take reasonable steps to prevent damage, especially when leaving the home unattended. Turning off the water supply before leaving for an extended period could have prevented the burst pipe or mitigated the damage. Flood insurance would not apply as this situation involves a burst pipe rather than external flooding, and securing windows and doors wouldn't prevent water damage from plumbing issues. Question 23. Standard practice question. Which type of Illinois homeowners policy would be best suited for someone renting out a portion of their home to tenants? A. HO3 policy. B. HO4 policy. C. HO6 policy. D. DEPA 3 policy. Answer. D. DEPA 3 policy. Explanation. A D3 dwelling fire policy is designed for rental properties and provides coverage for the dwelling against named or open perils. Depending on the policy, it is ideal for homeowners renting out their property or part of it to tenants, and HO3 policy is a standard homeowners policy for owner-occupied homes, and HO4 is a renter's insurance policy, and HO6 is designed for condo owners. Question 24. Standard practice question. What is the main function of Illinois fair access to insurance requirements? Fair plan. A. To provide flood insurance to Illinois homeowners. B. To offer auto insurance for high-risk drivers. C. To provide property insurance for homeowners who cannot obtain coverage in the standard market. D. To regulate insurance rates for low-income residents. Answer. C. To provide property insurance for homeowners who cannot obtain coverage in the standard market. Explanation. The Illinois FAIR plan provides access to property insurance for homeowners who are unable to obtain coverage through the voluntary market due to factors such as location, previous claims, or other underwriting concerns. This program is a safety net to ensure homeowners can maintain insurance even if standard insurers refuse to provide coverage. Question 25. Scenario-based. MS. Robinson's Illinois home was damaged by a wildfire, and while her insurance policy covers fire damage, the actual cost to rebuild has increased due to stricter building codes in her area. Which type of coverage would help pay for these additional costs? A. Personal property coverage. B. Replacement cost coverage. C. Ordinance or law coverage. D. Loss of use coverage. Answer. C. Ordinance or law coverage. Explanation. Ordinance or law coverage helps pay for the additional costs of bringing a damaged home up to current building codes. This can include changes to structural materials or safety features. Replacement cost coverage pays to repair or replace damaged property but does not cover code upgrades. Personal property coverage and loss of use coverage address other areas like belongings and temporary living expenses, but not rebuilding code compliance. Question 26. Standard practice question. In Illinois, if a homeowner's insurance policy includes an inflation guard endorsement, what is the primary benefit of this endorsement? A. It provides automatic increases in coverage limits to keep pace with inflation. B. It locks in premium rates for the policy term. C. It covers the cost of inflation-related repairs after a claim. D. It ensures full reimbursement regardless of deductible. Answer A. It provides automatic increases in coverage limits to keep pace with inflation. Explanation: an inflation guard endorsement automatically adjusts the coverage limits on a homeowner's insurance policy to account for inflation, ensuring the policy provides adequate protection even as rebuilding costs rise over time. It does not affect premium rates or deductibles directly, and it does not specifically cover inflation-related repairs after a claim. Question 27. Standard practice question. What is the primary purpose of personal property replacement cost coverage in an Illinois homeowner's insurance policy? A. To reimburse the policyholder for lost personal property at its current market value. B. To reimburse the policyholder for the cost to replace personal property without factoring in depreciation. C. To pay for personal property damage caused by earthquakes. D. To pay for repairs to personal property rather than replacement. Answer B. To reimburse the policyholder for the cost to replace personal property without factoring in depreciation. Explanation: personal property replacement cost coverage ensures that the policyholder is reimbursed for the full cost to replace damaged or lost personal property without deducting for depreciation. This provides more comprehensive coverage than actual cash value, which subtracts depreciation. Earthquake damage typically requires a separate policy or endorsement. Question 20. Scenario-based. After a storm in Illinois, a tree from Ms. Nguyen's yard falls onto her neighbor's garage, causing significant damage. Which part of her homeowner's insurance policy would likely cover her liability for this incident? A. Dwelling coverage. B. Other structures coverage. C. Personal liability coverage. D. Medical payments coverage. Answer: C. Personal liability coverage. Explanation: personal liability coverage in Ms. Nguyen's homeowner's insurance policy would cover her legal responsibility for the damage caused to her neighbor's garage by the fallen tree. This coverage helps pay for the cost of repairs and any related legal fees. Dwelling and other structures coverage are for her own property, and medical payments coverage applies to injuries, but not property damage. Question 29. Standard practice question. What is the primary function of the scheduled personal property endorsement in Illinois homeowners insurance policies? A. To cover high-value items like jewelry and artwork beyond standard policy limits. B. To provide additional living expenses if a home becomes uninhabitable. C. To insure personal property against flood damage. D. To provide earthquake insurance for personal belongings. Answer A. To cover high-value items like jewelry and artwork beyond standard policy limits. Explanation: a scheduled personal property endorsement allows policyholders to add specific high-value items, such as jewelry, fine art, or antiques, to their homeowner's policy with higher coverage limits than the standard policy provides. This endorsement ensures these valuable items are fully covered in case of loss or damage. It does not apply to flood or earthquake insurance, which require separate endorsements. Question 30. Scenario-based. Mr. Johnson lives in Illinois, and his home is heavily damaged by a tornado. While his homeowner's insurance policy covers wind damage, he realizes he will need to live in temporary housing for several months while repairs are made. Which part of his policy would cover these costs? A. Personal property coverage. B. Loss of use coverage. C. Dwelling coverage. D. Personal liability coverage. Answer B. Loss of use coverage. Explanation: loss of use coverage helps pay for additional living expenses when a home becomes uninhabitable due to a covered peril such as wind damage from a tornado. This includes the cost of temporary housing, meals, and other necessary expenses. Personal property coverage protects belongings. Dwelling coverage applies to structural repairs, and personal liability coverage applies to legal responsibility for injuries or property damage to others.